What's the current trend of Bitcoin? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Now you can enjoy up to a $30,030 trading bonus. As for BitGet, after completing Know Your Customer, KYC, you'll receive a $100 trial fund for every deposit worth $100. It's a very good deal. But you need to have enough trading volume. You can find it in the description below. Everyone is welcome to take part. In the BitGet X crypto trading contest, you'll stand a chance to win a share from the $15,000 worth of prize pool. There are also 3 tickets for a luxury tour in Japan up for grabs. Now, let's check out the Bitcoin chart. Let's look at the weekly candlestick chart. Looking at the weekly candlestick chart, you'll notice that in the past 3 weeks, you can find 3 doji candles in 3 consecutive weeks. It's a doji candle, right? For those who practice price action strategy, how will they react when they see a doji candle? When they see a doji candle, they'll expect a continuation. The trend began upward. The trend continues upward after a sign of continuation. If it doesn't continue upward, a reversal is about to occur. This means that we may see an upward trend, followed by a price reversal after a doji. I don't think what I said carries a lot of weight. It wasn't very meaningful. Just look at the doji candle here. Why are we seeing a doji candle? The trading started here. During this time, it went through ups and downs, and the closing price is equal to the opening price. There are only 2 trends you can expect from this. So what does a doji candle translate to? I don't think it's very significant. It's not very significant. Let's look at the weekly candlestick chart. It's no doubt we're seeing a bullish trend. And that is fine, because retracement has happened. After the pullback ended, it broke through the previous high. Indeed, we're seeing a bullish trend now. Now, let's look at the daily candlestick chart. It's also an uptrend. You can see that it kept rising and rising. Then retracement happened. Then, it continued to rise and a breakout happened. We're seeing a bullish trend in both the weekly and daily candlestick charts. It's completely fine. But now, let's look at the short-term cycle. Let's change it into an 8-hour chart. This is when the upward trend turned into a congestion area. Now, let's take a look at the MACD. In the 8-hour chart, MACD wasn't doing very well. What does that imply? You can see an upward trend here, right? Then, there's another upward trend here. The second rise is much weaker than the first one. Then, you'll see 2 swings in MACD. The second swing is obviously much weaker. You can see how significant the first swing was. But the second swing had a weaker momentum, right? It was losing its momentum. So that will bring about another situation. Although it hit an all-time high here, the price hit an all-time high. We're seeing a lower high for the 2 EMAs of MACD. It's a very typical divergence. Now, let's take a look at the 4-hour chart. There's a divergence in the 4-hour chart too. After the previous divergence had been resolved, another divergence happened. If we take a deeper look at the divergence, we can compare this rise and this rise. The latter is obviously weaker. The later divergence already has nothing to do with the first divergence. The first divergence has already been cancelled. A golden cross below the baseline is formed here. After a golden cross is formed below the baseline, we should be expecting the beginning of the second rise. But it didn't happen. Instead, it became a divergence. From the indicators, we can obviously see that it's a divergence. Then, the second divergence happened. The previous one has been resolved. But it is happening again. We're seeing top divergence. In many cycles, the resonance created by the divergence will only be resolved over time. No matter how strong the bullish trend is, we still need a congestion area before the chart will go up again. Then, the chart will go up again. Of course, there's a way to eradicate the problem too. Within a short time frame, we'll need a sharp pullback. Of course, it's not going as low as my drawing. After all, it's a freehand drawing. So after the sharp pullback, a new market will commence. In the 4-hour chart, the consolidation of Bitcoin actually happens within the box. When a box like this happens, and if you specialize in trend trading, like me, I specialize in trend trading. If you do manual trading, then you can only engage in trend trading. It's very easy to use a trading bot in a choppy market like this. That's why we developed a trading bot website, and have included many strategies on the website. If you want to add your account to the website, click on API Management, and you'll be able to add your trading account here. If you want to add your phone number, press Join Now. We have included many quantitative strategies. For example, a trend strategy will help you follow the trend. Of course, we'll also upload a few strategies that are useful in congestion areas. Then, press Start Quantifying. Now, we'll pick the account. I have $700 in my big get. Let me try it on Ethereum. Let's put in $300. The leverage is set 3x the amount. For the margin, I'll choose isolated margin. You can choose between a fixed position and a rolling position. I think the rolling position should be better. For the rolling position, when you're making money, the size of your position will increase. When you're losing money, the size of the position will reduce. I think it's a better option. Make sure you pick a rolling position. Alright. We're going to start the quantifying. It has been occupied by other strategies. It's alright. We'll just use the OKX account. Let's run the Bitcoin with OKX. Let's try it with $200. It has successfully followed the strategy. Once it has followed the strategy, you can see. Right here, you can see the two strategies I'm following. It's very convenient. It'll also show the profit you've made in this trading and how much you have paid. Of course, you're paying the strategy provider. You're not paying me. Everything has been listed down very clearly. Let's see how it will turn out after they start trading. In the 4-hour chart, it's a choppy market. It was rising. Then it became a plateau. Let me mark down 2 points here. These 2 points will show us when the trend is ending. For example, when it first started. This was when it started. Then, it went all the way here. Then, it started dropping. Then, it rose. Then, it dropped again. Then, it went up again. These few points can help us to track the rise. There has to be a track for the rise, right? In this upward trend, the lower point goes higher. And the higher point goes even higher. It's really happening. When will this stop? It'll stop when there's a breakout. Or we break below the lowest point. When that happens, the congestion area will be resolved completely. Then, we shall get ready to grab the coming opportunity. Don't forget the old saying. How long is the horizontal? How long is the vertical? As of now, the horizontal market movement has lasted for about 16 days. 16 days. The volume that has been accumulated here and the duration will very soon create a good opportunity that we shouldn't miss. But in which direction will it go? Let's wait and see. Indeed, the bull market is now showing signs of exhaustion. You should take note of this. I know we all have positions for spot trading or long positions with leverage. Personally, I'll hedge the risk of some of the long positions. Just to hedge the risk. Alright, thank you. You're welcome to like and share my videos. And subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much.
Eyes in the sky, gazing far into the night. I raise my hand to the fire, but it's no use, 'cause you can't stop it from shining through. It's true, baby, let the light shine through. If you believe it's true, baby, won't you let the light shine through for you?